morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is November 23rd, 2012. Lots to talk about, so let's get crack-a-lackin'. But before I do, I just want to wish everyone a belated happy Thanksgiving, and I hope all of you are stuffed full of wonderful Thanksgiving dinners. I also wanted to say thank you very much. Truly, thank you very much for all of you that are hitting the like button. It really does help me to continue in making these videos. I know that I only have 51 subscribers, but sometimes less is better. If I had 10,000 subscribers, then these mathematical formulas may not work as well. In fact, I've had those spammers send me messages to sign up for services to get more people to subscribe to my channel. However, I just choose not to because I'm happy and thankful for the subscribers that I currently have today, which are all of you. I also hope that all of you are making the wonderful money that this market has generously given us this past week. I won't lie because I really don't need to. I don't charge for this service. I missed the train here at the 135.40 level, but hey, like I said, I always miss the train, and it's just something that I do because I want more of that guarantee to work for me. But I'll get into that a little later. I hope all of you, however, jumped in on this level here at the 135.40. I was just getting a little bit too greedy, which is why I missed the train. In any case, speaking of not charging for this service, multiple people have told me that it really should be because, these calculated levels, it's been pretty much next month makes 1 year since I discovered it, and it's been working ever since then. 12 months straight. I would have to say that that's working out pretty well. So I kind of thought long and hard about it, and I did tell you guys that I wouldn't be charging for these videos, but at this time I won't be charging. But if one day I did charge, because I am thinking about it, then it would only be for new subscribers and not the ones that I currently have right now, which are you guys, because you guys are awesome. Okay, especially the ones that are hitting the like button will definitely be getting this service for free if I decide to start charging for it. But at very least, though, I was looking at maybe monetizing these videos. So what I did was I reached out to the software company to get permission to use their software on my videos, on a monetized video, and I'm just right now waiting for a response. Let's see what happens. I don't know. Wish me luck. We'll see. If it happens, it happens. Great. If not, then you know what? Not a big deal. And in the case, I've been babbling too long. Let's get into this analysis and see what kind of action we're seeing and why. Why I haven't taken a short trade yet. And, let's just get started with that. Alright, first things first, we are still currently in a downtrend. Nothing has changed. And because I don't see any new subscribers clicking on that subscribe button, I'm going to just assume that all of you already know and understand the way I trade and why I haven't taken a short trade yet, but I'll just run through it first. Okay, so we're still in a confirmed downtrend. Nothing has changed that trend yet until we close above this candle and validate that close above that candle. Can I say maybe possibly the trend has changed? Again, what constitutes a trend is you have a high, a lower high, a low, and then obviously a lower low, which confirms a downtrend but not an uptrend, and then vice versa for the uptrend, right? So if we close and we start making a higher high, right, so then this would be a high, and then this would be a higher high, and then we come down, right, and then we bounce up again, this would be a higher low. That will change the trend to an uptrend, but we don't see that yet. So on a technical level, we're still in a downtrend, so just keep that in mind. Now in the previous video, I had this 135.40 level here since November 8th. All of you guys that have been watching my videos should have seen that and should have taken a long trade at the 135.40 level. I did not take that trade because I got greedy. Remember, this is the chart of the SSO, the daily chart, and I had a mathematically calculated level here at 53.02. Yeah, I got greedy, and so I waited for the 53.05 level. I figured, I'll probably catch at a 53.05, and it didn't trigger, and I missed this train. What can I say? Anyway, switching back to the SPY here. I'm actually kind of happy I didn't show you guys the SSO in the previous videos. It was just something that I was just trying to be greedy at, and the only thing that you guys should have seen is this 135.40 level here. Oh, and before I continue, I just wanted to say I completely forgot. I kind of listened to what I was talking about in the previous video, and I kind of sounded a little bit big-headed, and I do apologize for that. Sometimes, when I make a right call, I get excited about it, and it kind of comes across as being maybe not conceited. I don't know what the word is, but big-headed would fit perfectly. And really, I'm going to try and humble myself in this video, because the market, if you don't humble yourself, the market will humble you for you. Okay, that's just the way it works, and I don't want to get humbled by the market. So I'm just going to try and kind of take a step back here. Again, I'm not trying to make money, so you know um I'm just going to try and not be as big-headed. In any case, we get this nice candle that we discussed, which kind of looked like a hammer candle. Before that, we had a spinning top candle, both right into this 135.40 level. We also had this pivot point here, which indicated even more support. I did mention that this support level would be a pretty strong support level. We were also in an oversold condition, and we also did it on higher volume than the past previous 3 days, which is all the indications of taking a long trade, in which case I hope all of you guys did. If you guys did, then boom, we had a nice pop right into this 139.21 level. We got a bounce or a pullback intraday, right? You can see that we actually kind of consolidated a little bit right on the 139.21 level, and then we just pushed higher. Now, in the previous video, I did say that I may consider taking a short trade here at this upper trend line, because it matches up right into this 139.21 level. So why didn't I take that trade? Well, there's a couple of reasons. And the biggest reason, if you guys already know, okay, well, let's take this day by day, simply because this is a weekly video here. So let's take this a day by day, and then let me just zoom in here. So first day, we create this candle here, which is 11/16, November 16th. November 16th was the Friday. So this day was 11/19th. 11/19th was the Monday. All right. So Monday we gapped up and we push all the way into this 139.21 level until we get somewhat of a pullback, intraday, I should say. And it really didn't get to the 139.21. It actually got into the 139.15. Okay, then why didn't I take a short trade at the 139.21 when in the previous video I said, I might think about taking the short trade at the 139.21 level, depending on how much of a stop I want, how much of a gap I want in my stop. Well, it's simple. Remember, in order for me to take any type of long trade or short trade, I'm gonna need a single candle or a double candle, whether it be a harami, engulfing, a spinning top, a doji, whatever, some sort of indication that there's gonna be a reversal. This does not indicate a reversal. Not only that, look at the volume. The volume was way less, right, than this. This is the start of any reversal, and then you're going to see the volume trickle down like you do see here, and then you're going to see a large spike in volume, and that's what I'm waiting for. Okay, so that's why I didn't take a short trade here, because it just didn't make sense to me. It was just one day. I need at least 3 days, right? Remember that. So we come up into this on Monday, and then on Tuesday we create somewhat of a spinning top candle right into this 20 moving average, and we have it in the 139.21 level. But again, look at the volume, not even an average volume, right? All right, so no problem. So I reach into Wednesday, which is 11/21, and what happens on Wednesday? We create this doji candle right underneath the 20 moving average, right underneath this upper trend line here, right above, however, the 139.21 level, and again, even lower volume. You see how this thing is working, right? And then of course on 11/23, which was Friday, because the markets were closed on Thursday, and Friday was I think half a day. Today was half a day. In any case, look at the volume. It's just ridiculously low. Yeah, granted it's half a day, but again, we don't see volume. And again, without that volume, it allows the institutions to prop this market higher, because there's nobody selling, right? And like I gave you an example in the previous videos, and again, I would update you guys normally if I had seen new subscribers, but since I don't, let me just refresh your memory. Like eBay, if you saw, I don't know, a watch being sold for 10 bucks, and you see two guys selling this watch for like, one guy selling it for 10 bucks, one guy selling it for 11 bucks, and it's, made in China or whatever. You're like, huh, I wonder. Well, you know what? Let's change that from 10 bucks to 100 bucks. Make this a little bit more applicable to what we're seeing now. So you're seeing these two watches being sold for, 100 bucks. You're not even sure if that's even worth the price because there's only two guys selling it, right? So you buy the watch. Next thing um, 50 guys are selling the same watch for like 20 bucks. Wait a minute, what just happened here? Well, it's simple, right? The volume will validate the price, right? Right now, we're not validating the price. Right now, the volume is decreasing, the market is increasing, which means that the price is not being validated. Had I seen 100 people on eBay selling the same watch for 100 bucks, that validates the price, right? I mean, it makes sense that that's the going rate for the watch. Because of the competition, because you can pretty much tell that if multiple people are selling the same thing or for around the same price, that's pretty much the going rate. But when you see one or two people selling it, you're not really sure how much that watch is worth. Kind of the same theory here for the markets, except what's happening is because the volume is so low, the banks, the institutions, the feds, everybody has that chance to prop the markets higher because there's no sellers in the market. So the question is, where's the sellers, right? Again, in my previous videos, like I always preach to you guys, volume is so important. Monday and Fridays are normally lower volume, but even more so, day before and day after holidays are very important because those are the days that people, don't trade, right? Traders spend time with their families, they eat Thanksgiving dinners, blah, blah, blah. I don't even know if you guys were trading around that time either. But especially so normally before holidays and after holidays, unless there's a huge breaking news that would cause panic and then traders would jump in just to get out of the market. Other than that, nobody's going to be in the market, therefore volume is going to be low, and that gives institutions a chance to prop the markets higher. Now, the only caveat now is what we have today is we are in a holiday season, meaning we have Thanksgiving, next month we have Christmas, and then we have New Year's. So in general, everybody's going to start taking vacation. It is a statistic that towards the end of the year, people save up their vacation and they take their vacation to fly to visit their families or whatever the case may be. So they're not just taking a day before and a day after the holiday. They're taking the week off of, say, a week in November or week in December, sometimes 2 weeks. So you're going to see volume dramatically kind of just level off and decrease right towards the end of the year. We all see that every year it happens, and a lot of times that's why the Christmas rally, or they call it the Santa Claus rally, tends to happen. Okay, not all the time, but if you look at past history of past previous years, we do see a Christmas rally or a what you call a Santa Claus rally. Now, so what does that mean in regard to what we're seeing here? Well, I'm going to tell you this right now. If you're already long, right, this I tell you guys here to already have a break-even stop, because if you had taken the trade at the 135.40 level, you should have a break-even stop here just to protect yourself in case it went down lower. But if you did that, you'd be okay, still okay, and you'd be sitting pretty in a lot of cash right now, and it's gonna be, ho ho ho, Santa Claus is paying you out right now from the markets, and you're being that Robin Hood, and you're taking money away from those evil institutions that have been ripping people off since the markets even existed. In any case, long story short, please have a in the money stop now, in case this guy starts pulling back. Okay. So that's for those of you who are already long and actually should already be long. And it's kind of weird how I'm the one telling you guys to go long at the 135.40 level, and I'm not long myself. Yeah, it kind of sucks, but that's what happens when you get greedy, and I got greedy. In any case, moving on. So what am I looking for? Because I am still looking to short this market. And you're probably thinking, oh, but you just said that there's going to be a Santa Claus rally. Why are you going to short the market? Well, because we are still in a confirmed downtrend, and you want to be with the trend. Whether the pullback is a counter trend trade or with the trade, or whether or not the trade or the trend decides to change now, I'll never know, right? I can't tell the future. I have to trade what I see and not what I think, because if I trade the way I think, I'd lose a lot of money. Just put it that way. Because you guys noticed from this video out in previous videos, I was like, okay, this is what the technicals are saying, and this is what I think, and it never happens to turn out to what I think is going to happen. In any case, let's get moving. So if you're already long, have a in the money stop. You should not at this point ever lose money. If you took a trade at the 135.40 level, there is no excuse for you to lose money now. If you are one of those people that will hold on to it until you think it's going to go through the sky, please stop trading, because trading is probably not for you. I've seen too many times where people are in the money. I tell them, put a break even stop. It's not going to kill you. It'll just stop you out. Break even. You can always re-enter the markets again. It's like you never even did it, right? And they refuse to listen to me. They say, no, 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 I don't need to put a break even stop because I'm in the money. So what happens is they're long, and then the stock reverses on them, right? And then now they're negative, right? They used to be in the money, and now they're losing a lot of money. Had they put in a break even stop, they would have been, stopped out break even. They would have let their stock go lower, which is what it is now, and then they could have jumped back in to the long side. I don't know. It's not an easy thing, because it took me a while to do that myself. But I guess in time, practice makes perfect, right? In any case, we have this trend line over here from this pivot point and from this pivot point here, and all you need is 2 pivot points to draw a trend line. Now this trend line isn't going to be that strong, but what I do like about it is that it is right close to this 50 moving average. So if we continue higher, we may see a slight intraday pullback from here, if not a bigger pullback. Now, because we had broken out of this downtrend line here, this could be considered a breakout, I guess you could say, but we need to validate this. So if Monday, and Monday is just naturally a low volume day, if Monday we can actually close above this candle here, then that'll confirm the breakout of this bottom trend line here, which is fine, not a big deal. I did another mathematical calculation, and what I came up with is, if you guys haven't noticed, this line over here, which is with a 144.07 level, okay, that happens to coincide with this old level here, which I got in September the 14th of 144.30. Okay, so that's pretty close. So I think we're going to have a lot of resistance around this area here. We also have this upper trend line here, right? So I'm right around this area here. We're going to have a lot of resistance, and I don't think that we're going to get past that. If we do get past that, I stop out at the 147.05 level, which is a $2 loss if it doesn't turn out the way I want it to. And the only reason why, however, I say that I would take a short trade there is because if we go straight up in there, I doubt we would, again, but this is what I think. But on a technical level, if we go straight into this 144.07 level, 144.30 level, around there, I would take a short trade, because we are definitely already, as it is, in an overbought situation, or in an overbought state. Because we're overbought doesn't mean we're going to pull back, but it gives that much more weight to the possible pullback. Okay, and again, we could go into here and it would be higher than this, but it would still coincide with this bottom trend line here, which means I doubt until we get another close above here would the trend change. Okay, so again, you need a higher high and a higher low in order for a trend to be considered a change trend, right? So now let's just say we go into this 50 moving average, or maybe into this double top over here, or into this trend line here, and we create some kind of doji candle, or even a shooting star candle. That's what I really like. I like shooting stars and hammers for the opposite way. Those are the strongest signals to me for single candle pattern type reversal patterns, I guess. In any case, if I see, say, a shooting star, say right here, or preferably what I'd like to see is a shooting star right into one of the mathematically calculated levels. Sorry, it's hard to draw here. And we get it on huge volume, like say we get volume maybe that high. Anything above this blue line, anything above average here, that's when I'm going to take the short trade. That's when I expect this market to drop. and then I'll probably sell 75% of it at this 139.21 level and see if I can get any lower, or if it starts to bounce. Oh yeah, and by the way, that last 25% that I had, when I sold 75% of it here, had stopped me out, but I still profited off of it. So I missed a train, but I'm still happy. Now I'm just gonna have to wait patiently for the next trade to happen. So again, the 144.07 level is the next level that I'm looking at to revert, to take a short trade. But we need everything to fall into place, right? And this is why me personally, and you guys don't have to listen to me, but me personally, this is why I miss a lot of trains, because everything has to align up. Align. I need to have high volume. Would be nice to have a reversal type candle, and I need to be in some sort of major resistance. And those are just three simple rules that I follow, and it keeps me safe. And so far, I've been, doing quite well off of those three rules. I think there's a little bit more, but the more rules I get, the stronger it becomes. Let me see if there's a Fibonacci retracement level here, just to validate anything, if there is such a thing. Yeah, so at the 50 moving average, we have this 25% Fibonacci retracement level here. So we may actually get some sort of reversal around this 50 moving average here, some sort of a pullback at least. But just remember, holiday season is low volume, and so you have to give an upside bias anytime you have low volume. But we are in an overbought condition right now, and all I'm looking for now is a reversal signal, because we're still in a confirmed downtrend, before taking a short trade. Okay, so just remember and keep that in mind when you're watching these charts for next week. Now for the dollar, amazing, isn't it? 81.26 was the level. It goes right into the 81.26 level, and then it reverses, right? It pulls back. It tries to retag or recover the 81.26. It's unable to, so intraday it pulls back again. It drops below the 200 moving average. It drops below the 20 moving average, and now we get an intraday bounce on the 50 moving average, which is pretty amazing to me, because that's a lot of support right around this area here, and it's able to, the dollar's just been selling off. But again, it's the volume, right? If there's no volume, then you have to give an upside bias to the markets, which is inverse to the dollar. So if you watch the dollar, you'll pretty much know what the markets are going to do. Because the dollar is already into the 50 moving average, we may see a slight bounce off the dollar. That's a possibility, which will give you a pullback on the S&P 500. And maybe we consolidate here in the dollar before heading back down here. But we have this 79.16 level here and this bottom trend line. So even though it does come down here, I don't think it's going to be long-lived. A dollar sell-off, long-lived, I should say, and we should see a bounce. Now the dollar is still in a confirmed uptrend, and nothing has changed in that manner either on a technical level. Now, of course, I always want to talk about the biggest guy in the S&P 500, because this is the market leaders, right? If this guy moves, then the markets will move. Is Apple, and again, a beautiful hammer candle on unbelievable volume, just like we discussed in the previous video. It was right into a pivot point here. So it's pretty amazing, because it's very similar to the SPY, except on a different day. And we have this 511.38 mathematically calculated level, goes right into that level, and then we get a nice bounce. We consolidate right under the 20 moving average. There's only a 2-day consolidation, though I don't like those. And then we break above and close above the 20 moving average, showing a bit of strength on Apple. Just keep in mind, though, this is holiday volume, so unless you validate this, this guy could come right back down. Okay, so just keep that in mind. We are still in a confirmed downtrend on Apple, believe it or not, right? We have a high, we have a lower high, a low and a lower low, etc., etc. So at the 598.86 level here, which is another mathematically calculated level that I did on this day here, which was 11:20. So that day I did it on Tuesday. Yeah, I think I did it on Tuesday. Oh, because we had this Monday move here. I think I did it actually on Monday. This 50 moving average should be coming down or sloping down at the same time, right around this area over here. I think there's going to be some resistance on Apple, and in addition to that, Apple is in an oversold condition as well. Alright, so to make a long story short, I'm just looking patiently right now for some sort of reversal signal because we're already in a oversold condition. In addition to that, we have a lot of resistance right around this area here. If we can get up here, that would be just perfect. I honestly don't think that we're gonna get there, however, because we are in an oversold, or I'm sorry, an overbought area right now. We have the 50 moving average is creeping right here, and the dollar looks like it wants to have some sort of bounce. But it's not what I think; it's what I see. And right now, I don't see any reason why we should be shorting the market right now. I mean, that could change easily on Monday, so just keep that in mind. But until I see that reversal signal, I can't make a trade. I mean, I just can't do it. Now let's just say we reverse on Monday and it comes crashing down, then I'm gonna miss the train again. But that again, that does not mean that you guys have to do what I do, because I definitely don't want you guys to miss the train like I do. I'm just a little bit more cautious before I make my trades, because in the past, when I first started trading, when I was more of the beginner, I lost a lot of money because I didn't listen to my rules. And the human emotion is the most strongest thing, and if that's not in control, in my opinion, if you can't control your emotions, your human emotions, when you trade the stock market, then it's just going to make it that much harder for you to make money. That's just me though, because I know some guys that trade based on emotion, and they do pretty well. So I can't say, but just for me, if I involve my emotions, meaning if I say I think it's going to happen, then more than likely it won't. So maybe if I did the opposite of what I thought, then maybe I would make money. I don't know. Anyways, it's just easier for me to look at the technical analysis because then it's consistent, right? And consistency is key, in my opinion. But again, thank you very much for everybody watching this video. Thank you very much for taking the time out. Have a great weekend. I mean, it's your holiday weekend. Maybe you guys took vacation next week. I don't know. But if you did, I hope you guys have a great time. In any case, this is your 7-minute market update, which is now 26 minutes. Thank you very much for watching. I hope to see you in the next video. And have a good day.